What's up, guys? Wanted to do this today for you guys. Really because I met with a broker the other day and we were talking about a couple of things, about the debt market, what's going on, San Diego County, multifamily real estate, institutional, big, nice properties. And I wanted to share this with you guys today because, number one thing is we're having a networking event. We're going to be doing a lot of these. Bell Capital's hosting them. But the big picture here is I want to get together with as many people who are interested in being passive investors in multifamily real estate as I can. Southern California, whether you're in LA, whether you're in San Clemente, whether all along the coast, all the way down to Tijuana, in San Diego. I want you guys to come out. I want to meet you in person. But the reason why I bring up talking to the broker is because you have to be in the know in your network. A lot of people want to invest in real estate. Let's say you're a doctor or you're a professional or you're a chiropractor, you got a practice, you're a small business owner and you want to invest money in real estate, you have a couple things happening. Number one, you have the money, you don't have the time. You're busy running your practice, juggling your family, trying to work out, try to stay healthy, manage employees, all of those things. Like you don't have the time to get involved in understanding and or learning how to go out there and do the real estate stuff. You can't be at these meetings. Like this, the broker that I met with, they did over $75 billion worth of real estate debt. They know exactly what's happening in the market. I'm sitting with them talking about what's going on because we're looking at a deal. And the reason why I bring it up is because you got to know. So number one, it's the network. Number two, to be inside of a network, they have to know you as well, which is why I wanted to meet more people. That's what this is behind me. Kind of bright, but you really can't see. But it's the networking event that we're doing. So if you want to go to that, go to bell-capital.com/RSVP. Put your name on the list. We'll get you over the details for that. But it is in Carlsbad coming up this week. But we are going to have others. So if you want to be added to the RSVP list, go to bell-capital.com/RSVP so you can get added to the list and be in the know in the insider network so you can not make the mistakes. And this is the stuff I want to go over with you guys today. So before you invest in real estate, which is what me and him were talking about, there's a couple of things you got to know. And you only get the inside information of this if you're busy as a professional by being in a network. So number one thing, you got to learn the locations. So there's a lot of different locations in San Diego County and in LA County and in Irvine, Orange County, and Irvine, and all the way through the Mission Viejo, which is the corridor that we look at for multifamily real estate to invest in. So the locations are number one. And we've all heard location, 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 but what does that even mean? If you have we're always fighting for the best location in the selection of what we look at, right? So we looked at a couple of properties downtown, right? This property was downtown. We actually looked at this property, but the point of that is there's areas in downtown San Diego that when I get there, I'm like, man, too soon, right? Great property, great asset. The location is great, but the location also comes with its problems. Homeless problems. They're trying to clean stuff up. People are migrating from one area to the next. Now, people will always be there. It's never going away. But do you want to invest your money there too early? Right? That's a huge thing. And there's different components to location. There's the actual property, like where the property sits, like whether it's downtown San Diego, whether it's in Carlsbad, whether it's in Mission Valley, wherever you're looking at it at. That property itself has its own location. It's either a good location or a bad location, period. That's how these things work. And then there's the neighborhood location. Where do you want to be inside of the neighborhood? Maybe in one area that neighborhood is great, but there's better schools in another area inside of the neighborhood that's a cutoff, so your kids aren't going to go there. And we're talking about long-term investing here. That's a problem, right? So number one, do you want to be early? Number two, where are you in the neighborhood? And where are you as it relates to that property is concerned? Because I've looked at properties that there's great properties on one side of the street, and then there's on the other side of the street, it's like older 60s product as it relates to properties. And that means what? These properties are going to command less rent. People are going to be moving out. You're going to have a bad element in one, but then you have a brand new property across the street. The location matters. And has that location always been successful? It could be a brand new property, but they might have had to tear something down. They had to do a land assembly, connect all these parcels together. But maybe at that location where they connected these parcels, they might have had some problems there. Maybe it's a failed location. You got to know that. So all of these things matter, especially when you're going to invest your money into a real estate deal where you're thinking, hey, I'm going to get cash flow. We're going to be in this deal 5, 7, 10 years. Will this thing stand the test of time? But the location is number one. But you don't know that unless you're in a network of people who already understand. Like I know I've called brokers and they go, hey, if you hated that location, you're going to hate this one. because this one is way worse than the one that you looked at, and you already said you didn't like that one. So I didn't even go look. I didn't need to. But you have to have a network of people to know that that's what's going on, especially if you're going to invest money or you're raising money or you're doing deals like we are, right? So number two thing you need to focus on before you invest money is what are the rents? What are the rents in that area, right? So you may like, for example, we look at uh, what I like to say is still affordable rents, right? Because the average rent in San Diego County across the board is somewhere around $2,900 in A to B class locations and A to B class properties. Now, you're going to find the range of rents, but you got to know that that's a rent. Now, that's an average rent. That's not medium, that's average. Average rent inside of a building, but that rent could go from 29, 39, $4,500 depending on what that is. And that's ones and two bedrooms of like, let's just say 900 square foot, right? That's a decent size in this market. Anywhere from 1,200 square foot, and it'll get a little bit more costly to 1,500 to 1,800 square foot for apartment, right? So, but you got to know what the rents are. Are they growing? Are they going up? Are they coming down? Are they staying the same? Are they flat? I believe rents are going to stay flat or grow just maybe 3% over the next couple of years, and then they're going to spike in 2027, 28, and 29 because there's not a lot of building going on right now. And if you see somebody building something, they started building a little while ago and they're trying to finish their product. Why? Because the debt market has been unfriendly, and they were just talking about it on CNBC. Maybe in September they might lower rates. Just last Friday they did not. The Feds held fast. And what does that do? It keeps properties where they are. It keeps sellers from selling. It keeps buyers from buying. And it tightens up the housing market, which does what? It keeps renters in place. And you got to know that, right? So if you're on the inside of a network, then you get to hear that. Like I talk to the property management companies that we're going to be working with, and I start getting these reports. They're called operating expense reports, and they're for a 2025, 2024, projection for 2026, all the way to 2027, based on their data, the system that they use to kind of aggregate or collect all of this rental income and rents from all across from 100 units and above, 100 units or less, mid-rise, which are like a couple of stories up, and high-rise properties that you see these big institutional properties downtown. They take all of that data and they give you the income based on their management and based on the systems, ones they manage, ones they don't, and the operating expenses of those. Those also affect the rent and the rental income, right? So you have to know these things before you invest in something. Now, I know I'm talking fast. I know I'm saying a lot. This is why I said I want to network with you guys, because we're not going to do this at a networking event or a mixer. I'm not going to throw up on you about real estate, but I do want to get to know you. You got to know who people are. Just like I got to know you, you want to know me, right? Same thing. So the next thing you got to focus on are jobs. Are jobs coming in or are they going? Most people, San Diego County, a lot of people talk about LA, and they talk about California in general, but there's a lot of jobs here in San Diego. And I'm not talking about baseline jobs. I'm talking about high paying jobs. You got life sciences, you got the medical field, the healthcare field, you have technology, you got IT stuff, you got engineering. You have a lot of different jobs coming in here that are 100,000, 100,000, 180,000 plus, and the $200,000 to $300,000 plus. There's a lot of jobs coming in here, but what does that mean? Typically, if somebody comes here for a job, they're not going to buy a home first. They're going to rent. And if you have a great piece of property in the right location and the rents are within line to the jobs and what they're going to pay based on their incomes, that's where people are going to go. And if it's a tight market, what does that mean? If it's tight, you got limited supply, the rents are going to continue to go up, at least in that building or the property and the location where you're at, if people want to be there, which is why location, rents, and jobs are so important. So you got to know that though. You don't know that unless you're talking to the right people, which is why I said you got to have a network of brokers that understand the deals, understand the debt, management companies that understand what the incomes are, jobs, whether things are growing or shrinking. Like all of this stuff should be a part of your network. And if you don't have that level of network, especially if you want to be a passive investor while you're busy running your business, you got to connect with somebody who's in the game, right? Like myself. All right. Next thing, we just talked about jobs. We talked about income. I was kind of going over that. What is the income? What's the demographics? We've all heard this thing, and it works, but it doesn't work, right? So, but if you have a professional property management company, what they're looking for is three times the income. So if somebody makes 100,000 a year, then their rent's probably going to be about $3,000, right? So when you get that understand, and if it's more than that, then you know what the rents are. And I said the average rent in most of the assets, the good properties are going to be 2,900, 3,000, 3,200, depending on the circumstance of that deal. So you also need to know how much people are making at their job when you're taking a look at some of the assets that you're looking at and the rents and what's indicative to what the average rent is for that property, the class of property, and the location. All right. Next, housing or houses. What are the houses around it sell for? Right? Like in our neighborhood, there's new construction. We live in a gated community. The houses in our gated community where we live at are somewhere in around 800 to a million two, right? Depending on the size of the property and what area in the community they're in. Now, outside of this community, right outside, there's a new development. Everything's a million two, million five. Right down the street, there's a million five, a million six. Like at some of the properties we look at, some of the because they're A locations, right? Maybe not, maybe they're B properties, A locations, or A property, A location. Like the houses around it matter. Like we looked at another 148, yeah, 148 unit building. And all around it, the houses were selling and sold for 1.5, 1.2, 1.8, $2 million. And as you get closer to the beach and the ocean, they were at 3, 4, 5, and 6. Right now, that property gets the benefit of that location and that address, that zip code. Like I said, location matters, which means that if we had a tenant in there, let's say we bought that property, all the tenants would want that zip code to live there for the schools, for the beach down the street, for the houses around it that are selling for 1.2 to 2.5 million dollars. Like that matters as it relates to what the houses are selling for. Because let's think about it like this: that same property, let's say we bought that property and price per door was 400,000 a unit, but all the houses around it are selling for 1.2. That is a huge difference. Because let's just use simple math. If you bought a home for $1 million, you'd have to put 20% down over there. 20% down, $200,000, $800,000 on your debt. Your interest rate on the rate on that would be some, let's just say 6. So you'd be paying somewhere around $5,000 to $6,000 a month, right? HOA, insurance, taxes, your mortgage. That's not including maintenance, the 6% cost to buy, 6% cost later when you sell. All these other things all these other factors have to line up for that deal to make sense. But let's just use $5,000 to $6,000 for your mortgage. Now, in that property, we say the rents in that property were somewhere around $3,000, $3,200 a month. That is half of what you would have paid in your mortgage, right? So think about that. You're going to pay $60,000 a year, and I just use an interest only type calculation in my head. $60,000 a year just in interest on your home, but you're only going to pay, let's say, $40,000, $42,000, or 36,000. Let's just go 42. $42,000 on your rent. Now you have a swimming pool, you have a community center, you're down the street from the beach, you still get access to the same schools, all the other stuff. You're still in the same zip code. You're in a community over there. It cannot be beat. And you don't have all the discrepancies that you would have if you were to buy $1 million home. And like I said, we just grabbed $1 million, but technically those homes started at 1.5 million selling and went all the way up to 2, 4, 5 because the closer you get to the beach. You have to know that about what you're investing in, but you don't know that unless you're living this, breathing this, and you're in this game. If you're going to be a passive investor in a real estate deal, there's so much more that goes into it, but you got to know these things before you invest in a deal. All right. And the last but not least, and we kind of went over this a little bit with when we started talking about jobs and income and stuff with our management company, is also the population growth. Is something growing or is it shrinking? Now, you could take a look at California as a whole and people go, oh, people are leaving in droves. They're actually not. People who live in California are going to stay in California. People who live in LA are going to live in LA. They don't need to leave. And if they leave LA, they're probably going to come to San Diego. If they go to San Diego, they're probably going to move back up a little bit past outside of San Diego, maybe Irvine, Orange County. They're not going to leave just random. So they don't have this population decrease that you guys think. But in an area, when you're talking about investing in a multifamily real estate as a passive investor, you want to know if that area population is leaving. People tend to not leave the beach community. It's really like, we lived in a beach home. It's hard to move out of a beach house where you look outside in the sand in your backyard, and then you move into a place like where we live now that there's a brick wall and a street back there. Now it's nice, but it ain't no beach place. And the thing about when you leave a beach community, depending on what you do, like we left for opportunity, but the difference of it is the key to get back in is not the same key to like if you leave and you get some money, you can't get back in that same community because there's limited product. So the population where your assets are need to be either stable and or growing. We always want to see some growth. People moving into that area, people renting, because what did I say? When you leave an area, you move into another area, you're not going to buy first. You tend to rent. So you get the lay of the land, you start building. We're not talking about families here. We're talking about transient people, right? Baby boomers. There's 75 million baby boomers, all becoming renters, selling their homes and moving into nice places. And then there's 75 million millennials getting out of wherever they came from, whether that's college, whether that's a job field, whatever it is that they're doing. And they're also renters. They're not buying. Everyone wants to leave and move around now. So with those two largest groups of people, we are looking at location, we're looking at incomes and rents, we're looking at job growth, population, demographics, how much are things around it selling for? Now, you can't know all that unless you're connected to one, commercial brokers, people who have access to the deals, commercial debt people, which we have access to for our deals, to talk about, hey, what is this going to cost us? How are we being able to do this? How's the asset management, managing of the asset? How are we going to make money? How are we making money for our investors? Like, is this going to be a play that we can stick into 5, 6, 7, 10, 20 years and be in this asset without losing money? That's really the game here, especially as an investor. So if you're thinking about investing, there's so much more things you have to know before you invest your money into a deal as a passive investor or even an active investor. Like, because if you don't know this stuff, you're not in the game. Like, someone should be able to ask you plainly. You should be able to say, yep, here's the areas, here's what they'll rent for, here's what we understand, here's the cost to build, which I didn't even go over that today. But you got to know those things because that all affects your investment and your returns, especially when you're a passive investor, investing in the right piece of real estate. So the number one thing about real estate investing or investing your money in real estate, number one thing is always the deal. It's always the deal. It's always the deal. And for the third time, man, it's always the deal. So, but if you don't know what you're investing in, is this the right deal? Is this the right location? What are the rents? What are the jobs in the area? What are the other properties, houses around it selling for? Are there competitors? Are there other people building over there? They're going to take what we have. Are we early in this neighborhood? Or is this just the best location we can get at? And this location is only going to continue to climb, which makes what? Our investments continue to go up because that's what we want. So, again, like I said, what other people don't like to tell people is that deals are not made on a spreadsheet, on a Zoom. They're not made that way. Deals between you and I, like people like me and you, people who want to invest in real estate, you're going to be investing with somebody who either does the deals, you're going to partner with them, like a company, whatever. Those are done in rooms. Those are done meeting people, shaking hands, kissing babies, running for mayor. Everyone has to get to know everybody because, like I said, it's not who you know, it's who knows you, right? So it isn't just you need to get to know me. I also need to get to know you because if we're going to invest in a deal, I want to know about you. Are you a dentist? Do you have a practice? Are you a doctor? Are you a professional? Are you an engineer? Do you have a small company? You have a business? You have 5 employees, 10 employees, 100 employees? What are your goals with the investments? Are you looking for tax write-offs? Are you looking for cash flow, long-term appreciation? You just want to be in a game, build a giant portfolio. You want to be in this market. Like all of those things help me to say, hey guys, I got a good deal. And this is based on everything that we've talked about when we met. This is your deal, man. This is it. Get in. Like this stuff matters. But you don't know that unless one, you're in a network, two, you're actually shaking hands, kissing babies, and you got to get out there and meet people. It's not going to happen just online. You got to be able to go. And I want to help you do that. That's why I'm doing what I'm doing, having the networking events for Bell Capital for our passive investor network. I want to grow the passive investor network into one of the largest networks of people who are committed to create wealth through investing money in real estate on the planet. That is my goal. Now, that's not going to happen in a month or 2 months or whatever, but I want to do that because I want to spend time and meet you guys. Right? There's not a lot of other private equity real estate guys that are doing that. Like you ain't going to meet some of the big players out there to show up to some event and go, hey, here's what we do, why we do it, much less have a YouTube video. I mean, they'll be on podcasts, but they ain't going to tell you how they do it. They're not going to show you exactly why they're making the decisions. I'm doing that. I want to do that because I want to get to know you guys. All right. You guys are my friends. I'm your network, your minds. That's how this works. So if you want to come to our networking event, go to bell-capital.com/RSVP. That's bell-capital.com/RSVP and reserve your spot. Or you can comment here and I'll make sure to get you the information. Do me a favor. What did you take away from this? What is the thing that you got out of this video that says, before I invest money, I didn't know that I needed to know this stuff? Right? That's why you have to have a network, because being inside of a network, you can pick up the phone and call. And maybe you're looking at something else and you're like, hey, Vic, I'm looking at a deal in Charlotte, North Carolina, or I'm looking at a deal in Florida, or I'm looking at a deal in Texas. Like, what do you think about this deal? Do you have a network of people or someone in your network that you can connect me to that can help me get this information that I need so I don't make a mistake? Dude, I want to do that for you. I didn't have that. I'm still growing my network of people, which is why I want to meet you guys. But you got to raise your bar because the network you currently have cannot help you get where you want to go. I promise you. If they did, they would have already been there. That's why you got to commit to having and continuing to expand your network in the direction of people who can actually contribute to the goals where you want to go. And that's what I want to be for you. So if we can help you, go to bell-capital.com. That's our website. You can hit get started now. I advise everybody who's watching this to go ahead and register at bell-capital.com. Go hit invest and just register for our investor portal. You can take a look at the open fund, what we have coming up available. You'll be added to our list. You'll get information that I don't send other people, right? That I don't put out on YouTube. You're on my list, not just my email list, but my list of actual people that's registered to our investor portal, our investor management system. So that way you get access to stuff that we don't give access to other people about. It's our crowdfunding platform. So that's bell-capital.com. Hit invest now or get started and you can go there. Or we definitely want to see you over at our investor networking event. It's for passive investors. And you can go to bell-capital.com/RSVP. I'm looking forward to talking to you guys. Again, leave me a comment. What did you get out of this? What did you say, man? You know what? I invested or you wanted to invest. I'm busy. I saw this and I listened to what you said. I didn't know that I needed to make sure that this happened. And being a part of a network is probably going to help me do that. Or if you knew it already, just tell me, man. I appreciate you guys. You guys have a great day today. Let me know if you need anything. Let's get after it. And boom.